When I draw up a checklist, I've learned to stick with it. At the beginning of the week, I told you what we needed to see before we commit a lot of money to buying stocks for the Charitable Trust. Tomorrow we convene our first annual investing club meeting in New York, not virtual, real, and I found myself noodling on the checklist in anticipation. Let me give you a thumbnail of what I'll be talking about tomorrow. Demonstrate how a good checklist can keep you from doing something foolish, like putting a lot of money to work in an ugly situation. First, I said there'll be no bottom until we see long-term interest rates stabilize. This week, they did the exact opposite, soaring in response to some overheated economic data. And we got a lot of it this week, especially today. Initially, long rates seemed like they peaked a few months ago, and I like that. But if this move keeps up, I think we'll actually challenge the 4 and change rate we got in October. With the 10-year at nearly 3.95%, we're already back to early November lows. Rates are simply going the wrong way. So is the dollar, by the way. Bad news for American companies that do a huge amount of business overseas. Second, we need to see super expensive stocks go lower. Sell. Another box definitely not checked, as these richly valued stocks actually enjoyed a resurgence this week. That is bad news for certain. Third, we need to see the recession-resistant stocks get some love as money managers coalesce around the idea that we're headed for a genuine recession. Believe it or not, that's what we want to see. And that worked earlier this week, but when the dollar started soaring again, well, there goes that neighborhood. In the immortal words of Survivor's Jeff Probst, got nothing for you. Of course, not everything is horrendous here. The banks outperformed. There we go, something going good. The broader market was not as good as the banks, both because there's a widespread belief the capital markets can't get any worse than they are, and because the traditional banks will coin money if the Fed keeps raising rates. Every tightening means they can take your deposits and invest them risk-free in treasuries for a better return. So far, that's far outweighed any increase in bad loans. This may sound like a thin read, but as I've told you for years, a market led by the financials is a market I like. It's a bull market. I also thought we'd begin to see a dichotomy in the retailers where the trade-down plays thrive, even though the higher price chains, let's say, do okay, but they're struggling. I didn't expect to see such a tepid number from high-end Home Depot, though, but their sales are heavily levered to housing prices. Who wants to invest in renovation when you don't have the confidence that your home's going up in value? I don't. Then there are real issues here. Really, because of Walmart. See, Walmart stock looked like it was going to come out and just break out to 150, but then the stock got hammered the rest of the week. Without differentiation, without some retailers doing well, anyone, we know Wall Street's going to keep throwing out the proverbial baby with the bathwater, and that could change this week, though, because we got a ton of new retailers reporting. Maybe someone can rally? I don't know. Why care about retail? It's just like the banks. Could be an important leadership group. If nobody leads, it'll be much harder for the market to bottom. Final checkbox, the market needs to get oversold somehow. We simply aren't there yet. In fact, until today, we actually got less oversold. I'm hung up on the S&P oscillator I've followed since 1986 because it's got a great track record for calling bottoms. Until it hits -5, we're in a trench warfare situation. Got to keep your head down. This is not the moment to go heroically over the top and try to buy something. We're only down about half as much as I would like to see after this evening. That's outright discouraging. That's why we have a checklist, and the decline of this market was anticipated almost perfectly by that list. I like to say there's always a bull market somewhere. I promise I'll find it just for you right here on Mad Money. I'm Jim Cramer. See you Monday.